Hello and welcome to this week's segment of Market Watch, where we talk about the Boise area housing market. And if you're new to the channel, be sure to subscribe so you don't miss future updates. And be sure to like this video if you want to see more content like this, as it really helps us out with the algorithm. So without further ado, let's get into it. This week and for the past several weeks, we've been seeing inventory continue to decline along with interest rates. In fact, we've been seeing more homes go pending each week than what we have for new homes coming to market for the entirety of the year so far. Right now, we have just over 600 homes available for sale in the existing market. That's about 30 fewer than what we had last week, and it's almost a third of last year's peak with just over 1,600 available homes. While pending home sales still remain below what we were experiencing this time last year, the overall number of pending homes, as well as the week-over-week numbers, have been steadily climbing. We now have just over 400 homes under contract in Ada County, which is about 20 more than what we were seeing this time last week. As for cancellations, so people taking their homes off market, we saw 29 cancellations in the last 7 days. For context, this time last year, we only saw 12 homes go off market. Granted, a handful of these homes will be relisted either with a new agent after making a few repairs or taking some new photos or even getting a more realistic price. It's also important to note that we had significantly less inventory than we have now, but I believe that this highlights the difference between the two markets we were experiencing now and last year. The Fed met earlier this week and rose the Fed rate by only 0.25% this time, which was expected. This marks a step down from the 0.5% we saw back in December and the 0.75% rate hikes we experienced last year. Powell has indicated that the committee is finally able to conclude that we're headed into a deflationary period based on their reports. Following the modest increase in the Fed rate, mortgage rates have continued their soft decline, still hovering in the early 6% range. And that's down by an entire percentage point from the 7.08% we saw back in November. So it appears we're gearing up for another strong spring selling season, and homes are still receiving multiple offers and selling for over asking price, and some others are starting too high and then ultimately selling for less, possibly with even more concessions to buyers. It's a fantastic time to be a buyer as you have more power than you've had in years, and the market as a whole is starting to feel more equitable for all. So that's it for this week's report. Hope you found this information useful. Be sure to subscribe and like this video if you haven't already. And if you'd like to receive our full report via email, you can sign up for our email list in the description below. It's completely free. And we also share new listings and other things like that from time to time. Well, I hope everyone has a fantastic weekend, and we'll see you all next week for Market Watch.